You need to have a look at the Urban Dictionary, don't you, my friend? Right, we are live streaming. Let me just make sure that it's not, or it is rather, just doing all the right things. Make sure it's on mute. Perfect. Right, so let's do it. So welcome one, welcome all. And again, Michael, first timer, welcome. And who we got here? We've got Michael, Brian, Adrian, user, still got user, YB, hello. Right, so let's do it. So if you're looking for information about swing trading the markets and generally how to make money from the stock market, whether it be daily, weekly, or monthly swings, then you're in the right place. As I always flippantly say about this point, if you're looking for underwater basket weaving or some sort of knitting program, then you've clicked on the wrong button. You might want to just hit the backspace. Nonetheless, if you're with me on the Zoom room, we're having a little Zoom party this week. The coffee's kicked in and we're going to have loads of fun finding opportunities in a very claret-colored markets. So my whole philosophy around how I try and do things is trading should be simple and ultimately it should work. It seems obvious that those two things should go together, but most of the time, very few people actually get that going. And what I'm trying to do with these open sessions on the Friday, and I've been doing them for, well, this version of them the last couple of years, but on and off for about the last 15, 16 years in one form or another. But nonetheless, my objective is to try and provide you the right tools, rules, software to support you, a community to lift you up. And if you'll allow me to be one, I'll be a mentor to show you the right way so that you can get real results in the smartest possible way. One of the main drivers is that I never had anyone to ask when I first started out. My first introduction to the markets was one of my neighbors at the time, friend of the family neighbors. And I was dropping quite literally a note off for my parents at the time. This was 14, 15. I got into this very early on. And I just overheard a conversation or the tail end of a conversation. And he's talking about gold this and buy that and, you know, hundreds of dollars, thousands of this. And, you know, it just sparked an interest. I asked him about it. He gave me the back of the envelope version. And then that's what sparked that curiosity. And given the fact that that was the only person that I knew at the time, and for the next several years, he was still the only person I knew, I asked him a few times over those years, like, can you give me some advice? Can you give me some pointers? Can you tell me what you do? And his answer every time was no. He didn't want to give me the leg up or the help that I was requesting. And in fairness, I started my own journey to go and do the reading thing, go to the library, get books. This is pre-internet days. This is the early to mid 90s. I actually started hand drawing charts and I took a very long path to getting where I wanted to be. So I don't want that for anyone. I mean, there is a faster path to most people's success, and the best way to get there is with a guide or a mentor. So that's what I'm trying to do with these sessions, just because I never had anyone to ask when I started out. So yeah, that's my motivation. I am the type of person that likes to stop tourists to see if they need directions. So some people are like that. I am that type of person, and I've come to terms with that. So with that said, we've got, again, the growing crowd of people. Hello, Zeke. Hello, Yuzi. You've still got your name there, my friend. We've got Ray, Randall. We've got Michael. We've got James. Hello, Glenn. Nice to see you again. David, Brian. Hello, Brett. Full house while I'm waffling away, just filling a few minutes. Anyway, my objective is to help you, and for some of you it'll be everything that you need. It just fills in a blank spot, something just slips into place, and then for others you may need some extra assistance, and that's fine as well. And it's most basic. Most people don't go into enough definition of what they're doing, and this was certainly my experiences. You know, for example is buy the dip. You hear it all the time, buy the dip. And they forget to qualify what that means. They think that any downward movement is a dip that they can buy. And you see it pretty much all the time. And I wonder why it doesn't work. It'd be like saying you've just got to drive the car forward, you know, to use a flippant car metaphor. If you just drive the car forward, you'll get to your destination. Well, the reality is if you're driving the wrong way in traffic, you're going to have an accident. So you need to know what the flow of the traffic is so that you can join the flow. And ultimately, you need to plot a path, a route. You've got to have a destination in mind so that you've got the journey to participate. And there's simply a lot more to driving than just hopping in a car and moving forward, put it in first gear. So we're going to take the same approach with trading. We need to know to the nth degree not just what a dip is, but what the trend is, so that we can buy the dip in the context of a trend, and then to qualify what we're going to call a dip and what ultimately makes it a dip worth buying, as I frequently say. So we want to define everything that we're doing, and it doesn't have to be complex, but just like driving or flying a plane, we can have a pre-flight checklist that gets us safely to our destination. And that's what we're going to do today. Ultimately, what I want to avoid is that early experience, the flapping around like an idiot, wondering what to do, flicking through chart after chart like a mindless zombie, hoping that the next one, the next chart, the next opportunity, the next time frame, the next indicator, whatever it was that I was doing, was the one that was going to be the holy grail. I'm sure we've all been looking for that at some point. I think the reality is that it doesn't exist. And I like to use a business metaphor at this point, where you don't hope that if you have a business, or you presumably we've all worked for a business at some point, we're all familiar with the concept of business, but it's unrealistic to expect one customer to come in and buy one of every product of every size, every shape, everything. You just buy one of everything. I'll take everything that you've got on the shelf. It doesn't happen. The reality is it does not occur. But yet, as soon as we have that thought in the trading world, I want one trade that's going to make me a millionaire. This time tomorrow, this time next week, we're going to be loaded. We can start ordering the Lambos and the big, multi-room mansions. It's an unrealistic expectation, but in the real world of everything else. But for some reason, as soon as we step into the trading world, it's like, yeah, of course it can happen. Of course we can win the lottery tickets, but it doesn't happen on a regular, consistent basis. So that's what I want to try and avoid. That's what I want for you to not experience that frustrating heartache that many people go through and never ultimately find their destination. It can be as simple as just changing the way that we view what we're trying to do. If you are ever asking yourself, where's the trade? Where is the trade? I'm looking at the stock market. I'm looking at the newspapers. I'm looking at the financial insert, whatever it is that you're looking for. And you sat there wondering where the trade is, then you're doing it wrong. And for years, this is what I did. I would go, where's the trade? You've got the self-doubt, the questions, am I doing the right thing? And even if you find a trade that you like, for whatever reason, there's that emotional reaction of like, did I do the right thing? Is it the right point? Is my entry good? Is my target good? Is my stop loss? Blah, blah, blah. Insert all those self-doubting questions. And it all starts with the wrong question. Where's the trade? What I want to do in my own trading, and selfishly, it's always for me first. I want to change the narrative. I want to make a very definitive statement. I don't know why I've got this as a question. I've just noticed this. No one mentioned it. It's a question. I want to make it as a statement. I want to go to, there is the trade. Can we change that? No, I'll have to do something about that. We want to make it from a question to a statement. It goes from where's the trade to there it is right there. Just like finding Waldo. There's that little bugger right there. Very pleased to continue to announce the expansion, though, of the strategy family as a result of that algorithmic approach. And that's just a fancy way of saying rules. If this, then that. That's all an algorithm is. And we've now got a suite of strategies that we can use pretty much in any market, any time frame, any condition. And because I've found, and it all comes down to, I found a good programmer. And the core strategy of what I'm doing is daily swing trades, or using the daily charts rather, to get paid at the end of the month or the end of the quarter. We've got a strategy version that gets paid at the end of the week, or 7 to 10 days, maybe a fortnight it might last. There's also brand new to the AntiVestor family is the one trade a day on the S&P futures. The idea is, this is actually the funny thing is, although this is new to the strategy family, this is actually the original strategy that I was trading 20 years ago. I've just managed to get it codified, systematized, validated, back tested, forward tested. I obviously traded this version of the strategy, or a variation of this, for 12 years and nothing other than this. And so we've got it coded up now. So at the click of a button, we can say, does it work? And that gives me confidence. That takes the self-doubt away. That takes the am I doing the right thing? The second guessing that was mentioned earlier, because we get to, again, validate the strategy over as much data as we can shake a stick at it. So that's what we've managed to do. Certainly it's the royal way, it's me. I found a great programmer who supports all my transitions. Again, I'm not a coder, I am not, but trying to get all of these things algorithmatized and coded up line by line. It's been a lifelong journey. I'm very pleased that it ultimately works. So I'm going to explain what I do. Obviously, you don't get the algorithm and the software part of it, but I'll show the rules. There's 4 simple rules. There's just thousands of lines of code to describe those 4 rules, but we're going to go through it. I'm going to show you what I do. There's no secrets, no stone unturned, so that you can find a dip worth buying and a rally worth selling. Oh, take a breath, Phil. Take a breath. So, lastly, and then we'll move away from the slides. I just finally started my personal podcast. I have had a podcast since about 2015. We're about 300 episodes in. It was with one of my business partners in the States, but this is now a solo podcast. So if you quite literally want to search AntiVestor in your favorite podcast player, it's on Apple, it's on Spotify, it's in anywhere that podcasts are there. And yeah, hopefully you enjoy it as much as I do creating it, just so you can get your every other day fix of market goodness. If you'd like to be featured, we can open the phone lines. If you've got a view on the news, you can share your view. We can record it here right now on our little fun Zoom party. If you've got a question that you want answering, if you're open to it, we can ask it and answer it. And ultimately, you can get featured on the new podcast at some point in the future. It won't be immediate, but ultimately, we can get it there. If you want to do that, feel free to just let me know in the chat box, and I'll be happy to toggle the mic on for you so that you can talk and we can have a little chat or ask a question, or you can share your view on the markets. Again, I want to try and make this as much of a community where you're involved rather than just you listening to me talk. Now, before we get into it, in case, again, 1 or 2 of you are new, and in case you're wondering who the guy with the funny accent is, my name is Phil Newton. I've been trading full-time since 2000, 2001. I've been hand drawing charts since the 90s. And these days, I want to spend as little time doing the act, or what most people think of the act of trading, so that I've got more free time. This actually started out because I've got Crohn's disease. I physically couldn't do things the way that most people traditionally do. I get tiredness, I get fatigued. Even to this day, I've got permanent mild symptoms. So I have to be very conscious about how I spend my time. And obviously when the health is good, then I can go and do other things with my time. It's also worth pointing out that I am not a Wall Street guru. I'm just a regular guy who found some success. Legally, I've got to say that past performance is no guarantee of future performance, but what I will demonstrate is that it does sing from the same song sheets, and you can see something comparative. And again, I'm just a regular guy who likes coffees and has got a weird thing for flamingos. We've all got something weird. That's my thing. I'm not ashamed to admit it in the slightest. If you see a flamingo in the wild, whether it's a real flamingo or a stuffed toy one, feel free to send it over. I don't know why, but everyone seems to find it hilarious that I've got a thing for them. I've got a collection somewhere. But by the by, that's my funny, quirky thing. So if you want to be involved, get involved and send me a flamingo in the wild. The strategy that we have, getting back to the points, is it works, it gets results. I'm going to show you it. So again, broker statements are on all the screenshots. I have good trades and I have bad trades. I have good weeks and bad weeks. I have good months and bad months. On average, just like any other business, we're looking to turn a profit. And again, I'm going to show you how I do that. If you would like to work more closely with me, there is a very brief invitation. It is invitation. I don't work with everyone. I appreciate that what I do isn't right for everyone, and that's fine. I'll always try and point you off in the right direction if it's not, and if it is, we can have a slightly longer conversation about your specific requirements. I've got to admit, I do get people results. It works what we do, because it is an algorithm and it's replicatable because it's rule-based and it's an algorithm in that regard. So if you'd like to make some changes, then feel free to, because if you don't make any changes, then you're not going to see the results that you're expecting. So you've got 2 choices right now. You can keep flapping around as you are, trying to Frankenstein a profitable trading system together and see if it makes a difference, doing that stock market equivalent of Where's Wally, or you can try a new way. You can plug into a tried and tested system that I've been developing for the better part of 28 years. I've invested quite a few $1,000s recently in the last 3 years, getting it codified and systematized and streamlining it so that we've now got this family of strategies that I mentioned earlier. And it is literally used to manage millions of dollars. And certainly I use the same systems now when I was running my own hedge funds. Trading the financial markets. It gets results because people tell me it gets results, whether it's an up market or a down market. You can see the last sell-off. Hopefully we'll have some new look how much money we made in the recent sell-off, because we are seeing a claret-colored week and day. So no doubt we'll see another round of profitable downward movements. And again, just to demonstrate, again, broker statements on the charts. Again, I get my own results just to say that I practice what I preach. Again, broker statements are usually included with most things that I'm doing. Again, I'm only showing you to say that I practice what I preach more than anything. It's not theory, it's all practical. Right, let's you'll be pleased to know, folks. Michael, do I trade the futures? The last couple, I trade stocks, stock options, I trade futures. I originally started out on Forex. These last couple of charts, this is the one trade a day on the futures strategy. So this is the S&P futures. And again, you can see that we have some good days, we have some bad days. Again, the losses, are always bigger than the the losses are not always bigger than the wins. The wins are always bigger than the losses. But you can see these are just some trades over the last few days. It doesn't set up a trade every day, but the idea is to find one trade for the day on S&P futures. It also works on the DAX if you're in the European time zone. But again, it is a strategy that is validated. I like to trade stocks and stock options. That's my personal preference. And again, originally, the S&P strategy actually started out on Forex, which is where I cut my teeth full-time trading back in 2001 for 12 years. Again, I've traded multiple markets, and pretty much you can pick your own poison when it comes to what you want to trade, Michael. Does that answer your question? Just let me know if there's any follow-on. But ultimately it's a strategy that works. It's validated, and again, I'm going to show you in a moment. And quite literally, at the click of a button, we can say, does it work on insert chart, insert time frame? And the software that I use called TradeStation will spit out a report and say, okay, we've got an expectation that we should make money on average here. Great, let's put the trade on. Let's go and do it. Right. Session today, spent long enough on the slides. Let's get into the charts. I'm going to spend about 60 minutes together today. We're already into that. We've already done the 2-minute intro to say who I am, why it's important, and just to prove that I practice what I preach. Let's take a look at the markets. Let's take a look at the strategy rules. And as I mentioned earlier, the phone lines are open. If you'd like to participate right now, I'll toggle the mic off. Just let me know that you'd like to chats, just say me or phone, or just pop a comment and I'll toggle off or toggle the mic on for you rather, and we'll get there. Anyway, we will get going. Right, the charts were there. So the markets, what a lovely claret color the day and week is for the moment. Why are you excited, Phil? Why am I bothered about the fact that the markets are down? The bottom line is we make money, certainly as a swing trader, we make money in up or down markets. If the market swings up or the market swings down, there should be a profitable opportunity to make some moolah somewhere. I'm just getting my drawing thing. Right, so we've got our downward movement in the market here. Again, why is this important? Because the strategy that I use benefits from swings in the market, whether it's an upswing or a downswing. So the first thing to note is that there's 3 lines on the chart here. There's a 200 period moving average, there's a 50 period moving average, and there's also a little speedboat one here. There's a 20 period moving average. As I often say, and all the regulars will roll their eyes at me when I say this, there is nothing magical about the indicators. If we were talking 5 years ago, I would have been explaining exactly the same thing, but through the lens of Bollinger Bands. There is nothing fancy or complicated to take away from the indicator of choice. The next question that I normally get is it simple? Is it exponential? Is it weighted? Is it triangle? It's bullshit. It doesn't matter. Pick one. I use a simple moving average. If you stack them all next to each other, you see that there's very little variation. There's very little difference between all the different calculations. And it's just some sort of bullshit if you're trying to think that there's something magical about them. All we're going to use the tools for, and I am very intentionally not saying indicator, they're just a tool to use, just like a spanner or a wrench. They're a tool to be used. So we're going to use them for a purpose. We're going to help them with our assessment of where price is in relation to these moving averages. So the first thing that we're going to do is we're going to say, okay, well, where is the 50 in relation to the 200? So the 50 is below the 200. So I'm going to call this a bearish stance. I'll be looking for movement to the downside. And because I'm calling it a bear market, because of this average price crossover, I'm going to be looking to sell rallies in a downtrend. So any upward movements in what I'm now considering to be a downtrend is a rally that I'm interested in. And I can use, again, the frame of reference of the 20 or the 50 period moving average to say, okay, well, when it's between these averages, that's now a rally in a downtrend. So I'm going to ignore the up days, the down days. I'm going to ignore the couple of up days that you can see there, but only when it's between. Let's try a different color fill. There we go. It's only when it's between those averages that I'm going to say, okay, now this is a rally in a downtrend. That's how I'm quantifying it. So let me just tidy the chart up. So the first time that that happens is right there. So price pushes down here. So we've got our average price crossover. There's the 200. There's the 50. Oops. It pushes down here. And all of those up days, down days, they can be ignored. But it's only when it comes, firstly, back above the 20. And if it got to the 50, I'd be interested there. But it got back above the 50. At this point, I'm going to call that a rally in a downtrend. Now, it's not an automatic sellable opportunity or shortable opportunity and profit from that down movement. It's when it pushes back below that 20 period moving average, which it did hit. And you can just see the algo fired off a trade entry there. So there is some validation here. So what I'm looking to do is to try and profit from the pushes away from the moving averages. When price is stacked, or in this case, below all three moving averages, that's my profit potential. And any movement back to the moving averages or between them will be considered a sellable rally in the context of a downtrend. So that's what I'm looking for. So this rally here, there was nothing to do, nothing to do, nothing to do, nothing to do. And then we get back below the in this case, the 50 period moving average right there. The algo's fired off a trade and we're pushing away. And this is the bit that we're profiting from. So the rally in a downtrend finds us the movement up finds us a rally in a downtrend, and then the push away is the bit that we're trying to profit from. And that's what's going on right now. So this is why I'm excited. This is something that we've been talking about for most of this year. Since March, we've been looking to sell rallies in a downtrend. And obviously for a bullish opportunity, the opposite is exactly true. So we'd look for a dip, a buyable dip in the context of an uptrend, and then we're looking for a dip worth buying. So we've focused on the bear side because we're obviously in a downward movement. We're looking for a sellable rally in the context of a downtrend, a rally worth selling. And then we're going to sell the rally in a downtrend when it pushes back below those moving averages. And at its most basic, that's what I'm doing. There's 3 rules for the trend and 1 for the entry. And that's it. Is it worthy of saying something like mic drop? But that is it. There is nothing complex. Well, let me just pause there, actually, before I press the magic button. And some of you know what I'm going to press. Does that make sense? If you are new, does conceptually the simplicity of this make sense? Buy the dip, sell the rally. That's all we're doing, but we're quantifying and qualifying what a buyable dip and a sellable rally is. Cool. They're 2 of the 6 patterns that I like to trade. 2 of the 6 patterns that I like to trade. So what I can do is, and I appreciate that this is the back of the envelope, it's an open session, we've got a very limited time here, there's a few more specific requirements as you can appreciate, but at its most basic, that's all I'm doing. At the click of a button, I can go, you know, if I just did that, if I just bought the dip and sold the rallies in the way that I've just described, at the click of a button, I can say, well, what would have happened What would have happened in the last 20 years? So the way that I've got my chart set up, this is the S&P 500. In the last 20 years, since 1999, if I just bought the dip and sold the rallies and had a fixed position size, this is non-compounded, what would have happened? Would I have made money? Yes, we've got a nice steady equity curve. So what this is the equity curve or the dollar returns over a 20-year period. If I just bought the dip and sold the rallies in the way that I've described, I think that's pretty impressive. Now, what this is this is what a positive expectancy strategy looks like. This is an edge in the markets. So I can quite literally say, well, if I just done this on the S&P 500, the market, this is the benchmark. So if this is the average expectation of what would have happened if I just bought and sold the what's commonly known as the market, then anything that's better than this is even better than the market. And anything that's below this benchmark, then maybe I can keep an eye on it, but maybe not worry about it so much. So the next part of this process is we've got a strategy. It works. It works on the markets. Now, what I need to do is practically, I can't trade everything every day all of the time. Because again, otherwise you're going to fall into the trap of flicking through chart after chart like a mindless zombie, hoping to find the next one. Now, I don't know which trade setup is going to work. I don't know which one will make me money. So it's better for me to focus on a small number of proven winners that consistently offer good returns. So what I'm just highlighting over on the left here, this is my watch list. Pressing the wrong ones here, bear with me. So that watch list on the left there is my top 25 stocks. So I'm going to look at what I consider to be my top 25 stocks, at least 25. Now you can have 50, you can have 75, you can have 100. How many should you have will depend on your confidence, your capital, and your commitments, the time commitments, the availability that you have. At the very least, 25 stocks is manageable for pretty much everyone. You know, it sounds like a lot, but it truly isn't. Now, the reason why I'm going to do this is because I want to apply this strategy expectation consistently to a small number of proven winners. Because I don't know which trade's going to work, I've got to take them all. Does that make sense? That last part makes sense. I've got to take the. I'm going to attempt a Pokemon reference. Why are you punishing yourself? Why are you doing this? You've got to get them all. If you've got kids, you'll know what I mean. You've got to Pokemon this bad boy. You've got to get them all because I don't know if the next one's going to work. I don't know if the next 5 are going to work. All I know is that on average, I'm expecting it to work. So again, for example, Apple, Wall Street's darling. I don't know if the next trade's going to work, and certainly the last 3 or 4 haven't. But I just know that on average, it does. So on Apple, I'm going to include it in my portfolio because guess what? Over the last 20 years, it looks like it's doing all right. And the equity curve continually is going higher over the last couple of years. So the expectation that it will continue to work over the next 6, 8, or 12 months, that's pretty high. I've got an expectation of an on average return in the future. Because history is suggesting that until something new happens, then this is going to continue. So that's why it's in the top 25. So I've got to take the setups when they occur. I've got to trade all those 25 stocks on the left. So when the trade sets up, the trade goes on so that I can emulate this performance. So I've got a strategy that works. I've got a small group of proven winners that are all, they all swing and behave favorably for the way that I want to trade. And now I've just got to trade with the frequency that the strategy sets up for these so that I can emulate something similar. Again, I can't guarantee it. No one can. But as long as I can get something similar, we'll make money. That's all we're trying to do. Let's compare this to real world for a second. All we've done here is if we were starting Phil's shoe shop on the high streets, we've come up with a nice location. We've got a business plan. We're going to cater to the ladies' shoes between certain sizes. Maybe we've got a speciality where they're, we specialize in stiletto heels. I don't know. But we've got a speciality. We've got target markets. We've got a business in a good location on the main streets. And we're going to business plan and we're going to advertise to those particular people who like that particular style of shoe, and we're going to try and get some repeat business on a regular basis. Yeah, that's honestly a great business plan, Phil, because in the real world, it makes sense. All we've got to do is emulate the same thing in the stock market world. And this is what we're doing. This is how we're doing it. Ooh, struggling with the shoe shop metaphor there. Stilettos. How, absolutely, Randy. Randy likes those shoes, don't you? Oh, behave. But you get what I'm saying. I mean, I'm being whimsical with the metaphor, but you know, if we were looking at the real world of business, you would, even just general knowledge, you'd be like, of course, that's true, Phil. Of course you expect it to work because it's common and standard business practice. Doesn't mean that business is easy. Don't mistake my words, because not every business works. But the businesses that don't work don't have a target market, don't have a clear idea of what they're doing, who they're selling it to. They don't have a business plan. They don't have a 3-year plan. They don't have all the things that you would commonly associate with business. And all we're trying to do is the stock market equivalent of run a proven and profitable, successful business. Now, just to show you the contrast, I'm also going to do things, or specifically not do things that don't make sense. So Pepsi-Cola is an international business. You may have heard of them. They sell a few beverages that people like. Good business, well-run, multinational, international company, mega capitalization, has dividends. On the face of it, good company. But does it swing in a way that is favorable for the way that I want to trade? Well, let's take a look at the equity curve. So this is the zero. This is the make money. This is the over-under, making money, losing money. So it's a steady decline. Now, we know that Pepsi's a good company. We know that it's making money. It's got good dividends. It's a good dividend player. But the reality is it doesn't swing in its price fluctuations in a way that's favorable for the way I want to trade, which is to swing trade. That doesn't mean it's impossible to make money on Pepsi. I know people who do swing trade. I know people who make money. But here's the trade-off. To make this profitable, I've got to apply discretion. I've got to pick my points. I've got to, bunny fingers time, analyze the charts. I've got to apply the Dow theory, the Gann theory, the Elliott wave theory. This is when you start stacking the indicators. This is where you start drawing trend lines and Fibonacci and insert some other bullshit thing, chicken entrails, and we're going to start getting our crystal balls out. Ooh, Vicar. But you get what I'm saying. You've got to introduce some sort of discretionary interpretation to make Pepsi work. So I would rather not trade Pepsi because, statistically speaking, it's not a favorable stock for the way that I want to trade at any point in the last 20 years. Maybe we just don't worry about trading Pepsi. Does that make sense? So a large part of what we're trying to do is figure out what the strategy that we have, find a group of stocks that it makes sense to trade, and exclude all the ones, the other 10, 15, 20,000 stocks just on the US markets that don't make sense. Get rid of that. I'm automatically going to get rid of penny stocks. I'm going to get rid of stocks that don't have options because I prefer to trade stocks with options, just as an alternative to trading stocks. So it's more capital efficient. I'm going to get rid of the stocks with wide spreads, low liquidity. I'm going to get rid of all the shites that is just not worth trading. The pink sheets. We're not the Wolf of Wall Street. I want to trade stocks with high liquidity even, with stock options that have a tendency to behave and swing in a way that's favorable on a regular daily, weekly, monthly, almost yearly basis for multiple decades, because the chances of that continuing, the trend, who would have thought, the trend of that behavior is highly probable to continue over the next 6 to 8, 12 months. And I will reevaluate these 25 stocks every year. And the list, I've got to admit, the list doesn't change too frequently. Does that make sense? Everyone happy with the logic? So think about what you're doing. Why is this trading lock not working for you? It's not because you're doing anything wrong. It's like, do you have a strategy that you've validated? Do you have a group of stocks that it's validated on? Are you trading a time frame that makes sense? Are you trading around your commitments that you want to apply the market to the markets? Again, that last part for example is like day trading works. I spent 12 years doing it. I'm very good at it, but you know what? I hate doing it, it turns out. So I don't do it. I don't want to day trade. I don't want to be sat there for 6 hours a day looking to trade 2-minute charts. It's not that it doesn't work. It's just that I don't want to do it. So guess what I don't do anymore? I don't day trade. Now, let's think about it in a different context. What if you don't have the ability to day trade? And what I mean by that is, what if you've got full-time job, full-time commitments, full-time something else? Then trying to practically day trade doesn't make sense if you can't physically trade during the day. Does that make sense? So this is what I mean by, like, you've got to find your means and your ability to trade. This strategy on the daily charts can be done pretty much at any time. At the end of the day, around, you can do it at 10 o'clock at night, you can do it at 2 o'clock in the morning. It doesn't matter. You want to make decisions at the end of the day. And even if you're making them through the day, that's fine as well. So with that said, that's the strategy, that's the process. I'm going to focus on my 25 stocks. And with that said, let's just start off at the top and work our way down. We've got a sea of red at the moment. Let me just go back to the market. Oh, look at that, glorious, absolutely glorious. So we've got the market's moving low. I'm just going to flip onto the 60-minute chart. It looks like we've got a little bit of an opening bell push up. You know what? We can't even get an uptick in this this market. So the bear side of the ledger is looking glorious. Anyway, we got price moving lower. I'm going to focus on my 25 stocks. So one of the things that I've got on the left here, if I just bunch them all together. So I've just ranked and sorted my top 25 in alphabetical order for no particular reason. Now, this column here, this is telling me, is the trend bullish or bearish? Is the 50-period moving average above or below the 200? If it's above it, we've got a bullish stance. If it's bearish, if it's below, we've got a bearish stance. So I can rank and sort my stocks into, well, should I be thinking bullish on these stocks or should I be thinking bearish? So at the very least, I've got, of the 25, I've got, unsurprisingly, quite a number of them are in a bearish posture. Some of them are still in a bullish posture. So there are still upward movements despite all the shenanigans that we're seeing at the moment. Although it's looking like we might see them all turn around as the market attempts to put in a Black Friday. I don't think we're going to be there, but it looks like it's just an average range of movement for the moment. But we've got some stocks are bullish, most of them are bearish. So there are some bullish opportunities. And the next three columns going from right to left, this is basically telling me where is price above in relation to the 200, the 50, and the 20. Now, if you remember from my visual explanation, I'm looking for price to be above the 200. Sorry, my apologies. Above or below the 200, above or below the 50, and then for this Bible dip and the sellable rally, I want that 20-period moving average to be a different color. So we've got a couple of examples on the. Bear with me. So above, I'm going to just focus on the bullish side. Just bear with me a second while I just rank it all. So all I'm doing is clicking the column headers, just like we would do with a spreadsheet. All right, so I've got price above the 200, above the, there we go, above the 50. Right, okay. So we've got on this row here, LNG, we've got price in a bullish direction. It's above the 200, above the 50. It's above the 20. Appreciate it's going off, selling off today, but we've got essentially that bullish uptrend that we should hopefully be profiting from on LNG. Let's go and take a look at that so you can see the visual, how that compares. So I can find most of the time an opportunity where price is profiting from those upward movements. And obviously today it's just dipping below. So you'd be looking to do something with that. But that's what we're trying to find. COP, we've got price above the 200, bullish posture, bullish direction, above the 200, below, above the 50, but below the 20. So COPD, COPD, I don't know what. I've got verbal typos coming at me, left, right, and center. So above the 200, above the 50, there's the 20. So yesterday it was dipping. So but still in that dip in an uptrend. So there's the rally. The algo's just closed that out. So we've got a profitable algo trade there. But price is now dipping in the context of a trend. So it's not an automatic buy. It's just saying this is now a Bible dip in the context of a trend. So I'd need to see price go back above around about $110. So that would be then become a dip worth buying. So we're in a Bible dip phase with this sell-off. So although we've got price red most of the time on most occasions, or most of the time across the board. This is going to be a dip or Bible dip. What makes it a dip worth buying is when it pushes back above, because then we're going to try and profit from the next part of the trending move. So there's nothing to do today. Probably nothing to do, but as it's Friday for the end of the rest of the week, or the last of the week rather. But we can keep an eye on this, and when it starts to behave favorably, again, we're trying to profit from those occasions where it's above all three moving averages. Now it's between them. We can start considering new trading opportunities if we need them, and this is what we've got here. Let's look at the other side of the ledger, because everything is selling off. So I'm just going to scroll down a little bit. So we've got all the bearish stocks below the 200, below the 50, below the 20. So what we should be able to see is the profitable part of the movement. And maybe you can start to see why I'm gleefully excited as we come into today's session, because there are bearish opportunities across the board. And the current rally in the markets would have created the rally and the downtrends that we described earlier. So for example, you've got all three moving averages there. Price had rallied and now it's below. The algo's just fired off there. You can just see a teeny little tiny arrow. So quite literally yesterday, the trend trading algo fired off an opportunity as per the rules that we've described. So looking for a downward movement in the markets. I got a few extra pieces of information here. It's not necessary to draw the extra stuff. It's just I happened to see what I saw was more of a wide-ranging channel. So we've got a little bit of a discretionary target down at $130 here, a little bit more conservative than what I normally go for. But nonetheless, we've got a nice $20 move to the downside as potential. And literally the algo using the rule set that I mentioned earlier fired off a bearish trade to get me shorts. Again, I'm already short on this. So there's nothing for me to do today because the rules that we use got me positions. Right, so let me just, let's quickly skip through. So expecting to see bearish move on AMAT. Let's just go down. So we've got AMAT. Guess what? Sell the rally in a downtrend. So there's the average price. There's the trend. There's the rally that we just saw. Price went below all three moving averages. Is it any surprise that price is moving down in a downtrend? Well, let's throw the question open. What do you think? Is it any surprise that this stock, which behaves favorably for the way that we want to trade, is moving down in the context of a downtrend? I don't think it's a surprise to me. Absolutely, Glenn. Thanks for chipping in. I don't think it's a surprise. I don't think all I've got to do is wait for the setups. And again, don't be wrong, as we've been very vocal, saying that in the market's point of view, we had like a 20% rally in the market, didn't we? From lows to highs, and AMAT did something similar. And it was frustratingly painful because there was very few bullish setups. And again, I'm not shy about saying, like sometimes it works, sometimes it doesn't. But it's kept us from, with the benefit of hindsight. Let's fast forward quite literally 3 weeks. The last 2 months, I've been kind of frustrated, as with everyone else who follows this process, watching this 20% rally in the markets. And there's been no individually bullish stocks to get a bullish trade on. Now, with the benefit of hindsight, the market's selling off quite hard and fast. The price behavior is all I need to concern myself with. Now, the in-the-moment experience, it was bloody frustrating. Not going to lie to you. Anyone who's been with me for the last few weeks, you would have heard me bitch about it at some point, as I have been today. But when we fast forward, when we've got the benefit of hindsight, we can say things like, well, the strategy did its thing. It did its work. It kept me on the right side of the market. As frustrating as it was to be in bearish trades during a 20% rally and in no bullish trades, but when the new the round of bearish trades set up, which they have, you can see the algo's got it marked off on the charts here, then we're on the right side of the move because we're trying to capture the trend. We're trying to capture or jump on the shirt tails of the institutional money, the river of money that moves and drives the markets. And again, we only know that we're on the right side of it with hindsight. And we've got to live in the moment when there's a little bit of frustration, which I've been quite vocal about. Right, I'll go through a couple more. AMD, I've been tracking this most this year, actually, on my email list. on the social medias, if you are in the communities, the free communities. I don't charge for an alert service anymore. I don't officially run an alert service. I haven't done for many, many years, but I'm generally posting what I'm doing in real time on most things. And you obviously know the rule set that I've got. You've got the list of stocks that I follow. So it shouldn't really be a surprise what I'm doing now that you know the big secrets. The hard part, as with all these things, is just doing it. And that, as we keep saying, if it was difficult, if it was easy, we'd all be doing it. But you've got the rules. And the hard part is ultimately having the faith to go and do it. Amazon, again, lovely. We've got the algo set up. It's selling hard and fast. I feel sorry for the people who completely bought into the fact that Amazon's a great company. And in fairness, it is a great company, huge, subscription-based company, but it doesn't mean the stock price can't move lower. We've got an algo trade on from around about $126 approximately. I'm looking for a move down to these recent lows, down to the century. Would you be happy with a $25 move on Amazon in the next 25, 30 days? What do you think? Would you be happy with a $25 move in the next 25, 30? Why 25, 30 days, Phil? That's about the average time in trade. Sometimes it's a little bit more, sometimes it's a little bit less, but on average, it's about 25, 30 days. I think I'd be happy with that. Can we all see the potential of what having just a simple systematic approach to follow can do for you? If you want to trade this a little bit faster, let's take a look at some of the stocks that I'm following on the 60-minute version. So this is the similar approach on the 60-minute charts. Again, you've got AMD, we've got Apple, we've got Amazon, we've got Google. I am trading a few others at the moment, but you can see the same principles that we talk about. This will get you paid in the next 7 to 10 days on average. Again, sometimes a little bit more, sometimes a little bit less. Again, I'm just tracking what we're doing so that you can see. And again, on these open sessions, you see me show you these charts. Is anyone participating in this? Is anyone seeing some good success who's just on these open sessions? Awesome, Glenn. Randy, thank you very much for your comments. Look at that. Glory to the bear. Glory to the bear. Now, as I mentioned, if you want to day trade, you can. I prefer not to. What I like to do is I want to know today if there's a trade tomorrow. So I've got a specific way that I apply the same set of rules on 2-minute charts. So if you want to have the speedboat version and trade the main move of the morning, then you can do. I just prefer not to, just because I like to do other things. A little bit lazy in that regards, but you can know today if there's a trade tomorrow with the day trade version of the strategy. So quite literally with the rules that you've got the rules, congratulations, to have them with my love. You can trade swings that will get you paid at the end of the month and the quarter, at the end of the week, or 7 to 10 days. The main move of the day, whether it's on 2-minute charts. And in the latest strategy version is to actually use there's no trade today so far, but to use the 60-minute charts on the S&P futures to sell rallies and buy dips. Again, with the shorter the time frame, just a fair warning, the shorter the time frame, there's some extra restrictions and conditions to apply because there's lower time frames. On the daily chart, you can be super loose, and say, buy dip, sell rallies. So there's less restrictions to apply on the daily charts to get paid at the end of the month and the quarter. And obviously, the lower the time frames we go, there's a few extra steps and restrictions, more specifically, because it's lower time frame. Everything I do, I need to be able to apply it on a one time frame strategy. I want to be able to apply it quick. I want to be able to go, there's the trade instead of where's the trade. But at the very least, you've got the how to find an opportunity with this style of trading. Awesome, Brett. Thank you very much for your kind work. Thank you very much. Appreciate it. Let me know. You should have the latest access to the strategy, Brett. I forgot to send an email out, but you should have the latest updates in the members area. Right, let's get back to just about finished early for a change. Right, if you missed it at the beginning, I'd just like to remind us, all that there is a brand new podcast. You can search AntiVestor in your favorites podcast player. We're on Apple's and the Spotify's and the Overcast, which is my preference. But again, any player that you prefer, you can do. I'd like to invite you, if you want to be featured and you want to hop on the phone, if you want to hop on the Zoom and say hello, if you've got a view on the news that you want to share with everyone, again, but trying to make this more of a community rather than Trader TV. If you'd like to get involved with our little Zoom community here, share your view on the markets. If you've got something on the news, again, I try not to follow news. Doesn't mean that you don't have to. I like to think of it more as entertainment. But if you'd like to share something that you've seen, feel free to. Just let me know. And awesome, Glenn. We'll do it next time. If you've got questions that you want answered, you can hop on and ultimately you can be featured on the podcast, obviously with your permission. You don't have to. But if you'd like to participate, again, just want to encourage you all to get involved with getting the most out of these open sessions so that I can try and give you what I never had, which is the support for new traders to make sure that you've got the best foot forward. At the very least, I would just like to invite you to go and check out the podcast. It would really help me out. And if you like what you hear, share it with one or two people that may need to hear that message. So let me just scroll back through the comments. So Michael's asking a question. About, is 1 hour chart best for the S&P futures? Firstly, there is no such thing as best. Michael, does that make sense? There's no such thing as best. Let me try and qualify that. There's only what, very Yoda-like. There's no such thing as best. There's only what works. So what I'm trying to do is, or what I was trying to do with the S&P strategy is I want to be able to check in, check for a trade, and check out. Now, there's some extra conditions to make it work so that I can do that. But what I'm trying to find is, like, could I trade the S&P strategy with a few extra steps? There's a few extras to consider, but does it work? And this is looking back over 14 years of 60 minutes continuous futures data. If I just bought the dips and sold the rallies with a few extra steps, would I have made money? What do you think? Is it best? There's no such thing as best. Does it work is a better question. Is this a suitable strategy for the S&P 500 futures using 60-minute charts? So you tell me, Michael. Does it work on this time frame? Been a bit of a dick with the answer. It looks like it would. Yeah, I am being a bit of a dick. That's all I want to know. So there's no such thing as best. It's like, does it work? Okay, if it doesn't work on 60-minute futures, then I'm probably not going to trade 60-minute futures. Yes, Ray. Well, here's the thing. It would work on any time frame. We can make it work on any time frame. There's a few extra variables that we can input. So if it didn't work on the 60-minute chart, I can certainly find out how to make it work with a few extra steps. Can I apply that on a 30-minute chart? Yes, but guess what? I can load up 10 years or 15 years of data on 30-minute charts, plug in some of the variables on, because there's some variables that I can, levers and pulleys that I can pull that apply some restrictions to the strategy. Because otherwise, when you're on if you're on, say, 30-minute charts or 60-minute charts for the S&P futures, it's a 24-hour market, effectively. You're not going to sit there for 24 hours. So we want to find a window of opportunity that makes sense. We've got a few extra steps to apply so that you don't sit there all day, every day, because that's the thing that I don't want to do. I want to check in, check for a trade, check out, and bugger off and go and do something interesting. So I don't want you to sit there either. So does it work on this time frame? Can I check in between a certain time window where I'm at the desk anyway and apply this strategy? Yeah, it's looking good. I can have one trade a day. The objective with this strategy, and remember when we were using our car metaphor, I need a destination to travel to. Does this strategy provide me with capturing the main move of the day with the rule set that I prefer, with some extra conditions so that I'm not sat here all day? Well, yeah, on average, I'm expecting a positive expectancy. Great. This is a strategy that has a positive edge. If I was to apply it to the 30-minute chart, I need to try and find that the optimal points to apply the same strategy. Same with a 2-minute chart. I'm not going to sit here when I do day trade every now and again. I want to know today if there's a day trade opportunity for me tomorrow. So I'll know with 24 hours advance notice of, is there a very short-term opportunity that means that I can capture the main move of the morning? Could I capture the main move of the morning? It looks like Apple's going to give us that. So for example, we've got the averages are all stacked up on each other. I like to trade breakouts. So we've got a lovely little consolidation. The overall direction is down, as we know. So there's your breakout, there's your pullback, through 150. And we've got a nice little, here's how we get paid in the morning. I want to be able to profit in the first 60 to 90 minutes on a 2-minute chart. So you can apply it, but I'm not going to hit. Now, here's the point I'm getting to. Is I'm not going to apply it whimsically. I'm not going to just do it because I feel like doing it on Apple, for example. I'm going to go back through 3-5 years of data on 2-minute charts and apply that strategy using the algorithm and say, does it work? It's not what's best. Does it work? And if the answer is no, then I'm not going to apply that strategy with the extra conditions on a 2-minute chart on Apple, because there's no edge to trade. Think about it in this way. Think about it this way. If you have a hot dog stand, we've gone to hot dogs. It's lunchtime here in the UK. I've not had any dinner. I'm thinking about food. So I don't know what hot dog. Let's say you got a hot dog stand. Where is and what time would be the best place to sell all your hot dogs if you could only run that business for 1 hour? Would it be outside, lunchtime for 1 hour, or maybe outside of a nightclub at 2 o'clock in the morning? But you get the point. Ray, you've spot on. Yeah, lunchtime. You got a hot dog stand. Go and stand outside of now how about this? You go and stand outside of a football stadium where there's thousands of people who have got few options for food. How about outside of a nightclub at 2 o'clock in the morning? Outside of thousands of people who've been bouncing around like idiots, who are probably a little bit peckish after a night on the razzle dazzle, and maybe want a little nibble on the way home. You get what I'm saying? It's like, where is a hungry, starving crowd? So in the real world, we can think of those optimizations as, okay, if I've got this great business idea, where can I have the most amount of impact with the least amount of efforts? How can I apply that logic to the stock market? How can I get the most amount of results for the least amount of time at the computer? Maximum opportunity with minimal efforts. I'm not, again, don't mistake the simplicity of what we're doing for complexity. It's not complex what we do, but it's not easy to apply for everyone. Again, not everyone makes this work because not everyone has the faith to do it. Why don't we have faith in the ability to do it? Because most people don't know if it works. Not what's best. Forget the bet. There's no such thing as best. Does it work? Yeah, great. Let's apply the same logic that we just did in the real world of business. Let's find a hungry, starving crowd to sell hot dogs to so that I can have the most amount of sales in the least amount of time in the most efficient possible way. Let's take that logic and apply it to the stock market so that we can have the most amount of profit opportunity with the least amount of screen time that gives us everything that we want without having to flick through chart after chart after chart like a mad zombie. I think that's a pretty good comparison. I might use that again. Awesome, Glenn. Thank you very much. Ray, that's a great point. That is an absolutely spot on point. So Ray's making the comment. So this is why Forex traders trades the early morning. So the London and European session. In the currency world, the London Open is the most liquid and active time of day. It's got the most amount of liquidity. It's the center of the financial market in the Forex world. So US day traders find the opening belts, the most amount of liquidity, the most amount of bang for buck. And similarly, the second most rate is about the last 30 to 40 minutes of the day. The last 30 to 40 minutes of the day, you've got the most amount of liquidity in a very small window of opportunity. So if you want to trade the opening bell, you can trade the opening bell. I never saw the logic in waiting the first 30 or 60 minutes. You're a day trader. I want to trade the most amount of liquidity with the biggest amount of potential, not always, but you don't always get it, but the most amount of potential movements is at the opening bell. Why do you want to miss the best part of the day? Similarly with Forex, yeah, the London Open. Back in the day, if I think 2004, 2005 qualifies as being back in the day. When I started out trading currencies many years ago, you could quite literally check in at 8:30, look for a breakout of the Asian trading rate, because during the Asian session, 24-hour market, during the Asian session, it usually had a consolidation, a very well-defined consolidation. So around about 8 o'clock, 8:30 a.m. in the UK hours, so the London Open, there would be a breakout, and you could trade that breakout on the first pullback and capture an average day's move by 10:30. The main move of the day was done in the first 2 hours of the official trading day, the London Open. And it was regular as clockwork. And for years, you could just literally, 3-4 times a week, well, there's the range, there's the breakout, there's the entry. Average day's move is done by 10:30. It was regular as clockwork. And obviously, the market has changed dynamically. It's a little bit changed. These days, it doesn't quite work in the same way. The patterns are still there, but they're just not as fluid as what they used to be. There's a few reasons for that, which is not really worth going into right now, but regular as clockwork. So we want the most amount of opportunity in the shortest possible time with the best amount of liquidity. It gives us the positive edge. Awesome. Reading up on the comments. Perfect. Right, I pretty much could wax lyrically on this. I think we're done. I'm not seeing anyone who's asked to hop on and share the mic. Maybe we'll do that next time. I want to try and encourage you also. If you're feeling confident, feeling brave, and you want to get on and have a little bit of a chin wag, if you want to share your views on the markets, and you've got a news thing that you want to share, if you've got a question that you want to ask, or maybe you'd like to have a little bit of a chat and share something with the markets, and you want to be featured on the brand new podcast, then I'll take that little snippet and I'll put it in a future episode so that we can showcase how great a trader you are. So with that said, I don't see anyone that's asking that, so maybe we'll do that next time. I'll keep calling out again. It is a new thing, and I've just sprung it upon you, but if you'd like to, just know that the choice is there. So with that said, let's start wrapping things up. What's your biggest takeaway for the day? Cheers, Randy. Cheers. Ray, you are a good trader. You know the rules that I'm using. That makes you a good trader, or by default, you're here. You are a good trader. So what's your biggest takeaway? Any big ahas? Anything you want to kind of add in? But what was the thing that kind of stuck with you? Again, let me just get rid of some of last week's interesting snippets. Consistency makes legitimacy. Oh, I like that. Rolls off the tongue. Patience maketh the trader. More dollars to new lows. Look at it go. Fabulous. Let's take a look. We're breaking lows. Glory to the bear. Glory to over there. Glory to the bear. Bazinga. I'm just quickly looking at my brokerage on the other monitor. Oh, what a glory to the bear. All hail to the bear. Look at that. My favorite trade at the moment is Amazon. Just because it's out of bed. Quite literally. Look at that. 125 down to 100. I think I'll take 25. I think I'll absolutely Brett. Hear my roar. It's certainly going, isn't it? $25. I'll take that. Thank you very much. Something for the weekend, sir. Oh, suits you, sir. Right, folks, I see everyone's popping off already while I'm just waxing lyrically on the bear moves. Thank you, as always, for your time and attention. It really does make the world better when you're involved and interactive It certainly makes it more fun. I will try and encourage everyone to hop on the mic and have a little bit of a chat. So if you've got the opportunity to, there's going to be a regular invitation. I appreciate I've sprung it on you once again this week, but if you are a regular and you'd like to be involved at some point, if you've got a piece of news that you want to share, you've got a question that you want to ask, or you just want to hop on the mic and just take it for a spin for 2 minutes and talk about your favorite trade or something that you're looking at, let's try and make it a community rather than just me as a talking head. So let's make it happen in the future. If you've got any value from today's session, the only thing that I would ask each and every one of you to do is to do it. The rules that I use are very simple to do and follow. And again, I just encourage you all to do it. So I appreciate that this is the back of the envelope version of the strategy. So if you do have, if you would like to learn the process in more details, the entries, the exits, stops, the targets, the trade management, and all the things that go along with it. The reality is we've only touched on it sounds like I've given away the farm. I honestly haven't. What we've gone through today is a very small part of the mechanical trading system. And we've got a fully immersive strategy and process to follow that makes regular money from the market. So if you would like to learn more about those rules, please feel free to get in touch with me, hit reply on any of the emails that you get from me, or you can shoot me a message in Slack if you're a member of our Slack community. So I think that's it. There's only one thing left to say, which is what should we do? What should we do? What should we do? Let's charge the Tesla today. Time to charge the Tesla. Let's dock ourselves and enjoy your day, enjoy your weekend. All that I would ask, we've already done the just do it parts. I think it's just time to say, stop talking, Phil. Let's do it. Game over. Thank you very much for your time. Thank you very much for your attention. Have a wonderful day. Enjoy your weekend, and may the bear be with you always.